Hello to everybody. FutureTrend channel is glad to welcome all of our subscribers. For the date of 5th of November 2018, we start our everyday's analysis of how to trade major currency pairs during next couple of sessions. Friday was a day of publication of mostly anticipated, mostly important United States economic numbers in the form of United States payrolls report, and let's be truth, the United States payrolls report came in above expectations, and that's why probably the United States dollar is looking more or less stronger at the moment comparing to the beginning of previous trading session. Anyway, as we already told during our previous report, we would use such kind of a rebound of the United States dollar to enter new short positions in this currency. Anyway, let's see the situation from one pair to another. As usually, let's start from the euro dollar, which is trading around 113.92. As you could see in the daily chart, the pair is still trading above its probably pivotal support barrier that's located at the moment around 113. Also, we still expect that this currency pair formed a kind of double bottom formation against 113, and probably will in the next couple of sessions will form a kind of a stronger rebound. Anyway, we should understand that economic numbers coming from the United States should play a major role at the moment, and today is a day of publication of United States ISM non-manufacturing sector PMI, and of course, in case of better result from this publication, United States dollar could receive some additional boost, and in that case we should understand that probably the euro dollar will react back to the level 113 anyway, while above that level once again we continue to expect the euro dollar a little bit higher from current levels. What else expect from this currency in case of bullish resolution? Probably we need to break above current downtrend, the downtrend of 2018, that's located around 116.60. That's why the level of 116.50 is our target level at the moment regarding our existing long position that was opened at the 113.10. Once again, we put a stop below 113. In this case, our stop is below 112.80. Dollar yen is trading a little bit higher at the moment because of reducing risk aversion sentiment, also because better payrolls report, and all in all, the pair continues to look supported. Despite of previous reaction to the level 112.50, the pair still continues to look encouraging for the dollar bulls. Anyway, we suggest to stand aside, and we will use an opportunity of another rebound to the level of 114.50. We will use such an opportunity to establish new shorts in the currency. As regarding cable, the cable is trading around 130 at the moment. Here the situation will be dictated by the news coming from the UK as well as from the European Union regarding future negotiation process of Brexit. And of course, if the sides will be closer to signing an agreement before the deadline, or that's scheduled for the end of March 2019, of course in that case cable as well as some other sterling crosses will receive some additional support. Dollar Swiss, taking into account that most of Swiss currencies, Swiss crosses are looking encouragingly better now, and from that point of view, the dollar Swiss should continue to outperform some other currencies. That's why, despite of a dip on Friday to the level of 99.60-70, the dollar Swiss still continue to look more or less supported and could retest a very important level of 101. A break above that level could retarget the dollar Swiss to the level of 103 to the level of 103.30, where lies the highs of 2017. If you remember, January, the start of previous trading year, the high was around 103.35, and we should understand that in case of breaking above 101, next level to watch will be 101.70, and after that probably the level 103.30.40. And finally, a few words regarding regarding euro crosses in our strategic portfolio, where we still miss any kind of positions, but we will concentrate your attention on a commodity block of currencies where we re-entered a small long position in the Australian dollar. Let's see the chart of the Australian dollar, which is looking increasingly interesting at the moment. While we are trading above 71.50, we suggest that after retesting its downtrend line, probably the Aussie dollar will be back to the upside. Don't forget that during this overnight we will receive some new information from Royal Bank of Australia, which will decide on its future path of interest rates in Australia, and any kind of signs for more earlier interest rate rises, despite of the gloomy gloomy Australian economic indicators we witnessed during previous time and recently. All in all, in that case, Australian dollar could receive some impetus to the upside. That's why we still continue to hold our long position in the currency with a stop below 71.50, and we suggest that it's time probably to wait a little bit higher. The Australian dollar even retest its moving average 200 daily line that's located at 74.80 at the moment. That's why we put our target at 74.50 at the moment. That's all. Thank you very much for your attention of our channel. We will be back to you tomorrow, 6th of November. Bye bye for now. Take care. It was your Future Trend channel.